a little about the dollar and your position here. You think it's going to go even lower from where it is currently?
Well, I know it's going to go lower now. There may be a rally coming because right now there's so many bears on the dollar, including me, that usually leads to a rally. But I plan to sell that rally. No, the dollar's in serious trouble.
Why?
Well, mainly because we have a horrible balance of trade surplus, and we're the largest debtor nation in the world, and we've got a central bank. You know, we've got a man running the central bank who wants to drive the dollar down, is driving the dollar down. He's printing money as fast as he can to save his friends on Wall Street. You've got to get out of the dollar, Maria. It's not going to be a good place to be.
The last time we were together, I think you said Ben Bernanke is a fool. I mean, come on, Jim. You really feel that way? You say, look, he's going to try to help his friends on Wall Street. What's wrong? What does he not know that he needs to know?
He doesn't understand about markets. He doesn't understand about inflation. He doesn't understand about currency. And last week, Maria, he testified before Congress. I was terrified. Now we know he doesn't understand about economics. He was sitting there saying, if Americans only buy American products, it doesn't matter if the dollar goes down. The man doesn't even understand economics, and he's running one of the most important central banks in the world. If you buy only American tires, and the price of foreign tires go up, American tires are going to go higher in price too, plus the price of rubber is going to go up. The man doesn't even understand economics, and that is terrifying, at least to me.
That's amazing. So you don't think he's handled this most recent tight credit environment well? I mean, how would you rate his performance in the last 3 months?
What tight credit environment? It's been crazy. He cut interest rates by 0.5% in August. Send a flag to the rest of the world. We don't care about the dollar. We want the dollar to go down. We don't care about
inflation. They always
inflation.
give you that lame, the dollar is the best interest of this country, and then they don't do anything about it.
I know.
All of that. Treasury just fell.
I know. Poor Hank Paulson, I would I feel sorry for him. He's going around the world saying, we favor a strong dollar, and then at the same time, he's going to China and saying, please drive the dollar down. He's going to Japan saying, please drive the dollar down. And then he stands on CNBC and says, we're in favor of a strong. I mean, the man, reasonably well educated, had a good career, and now he's making a fool of himself all over the world.
So Ben Bernanke's a fool, Hank Paulson's making a fool of himself. Is there anyone that you have confidence in for economic policy in the U.S.?
The head of the European Central Bank is doing a whole lot better job than ours.
Let me ask you about Europe right now. It brings me to a good point. Have you seen any upset to the global growth story as a result of the U.S. slowdown? Because that's really been the great part of the economic story overall, the global story.
Well, I've just come from China and Singapore, where we've just moved. Yes, you're starting to see house prices and real estate prices in Asia even starting to slow down because people see what's happening in America, and they're terrified of the financial system. So, yes, it's starting to have effects on other countries.
And do you think that is going to be sort of the straw that breaks the camel's back in the U.S.? Are we going to go into a recession? What about another recession?
We're in recession right now. The government says we're not, but they always lie. You know that. Finance is worse than recession. Housing, automobiles, machinery. Caterpillar said it's the worst in 50 years. Starbucks, retail. What's not in recession?
How bad can it get, do you think, Jim?
Well, it will probably be the worst recession, or among the worst recessions we've had in some time, because we have huge excesses that we haven't had. We haven't had this kind of excesses since the dot-com bubble, but that was not that kind of excess. Now we have a gigantic credit bubble, and that's going to affect a lot more people than a dot-com bubble.
So what about that, the credit environment, and in particular the financials? Every day we're getting more write-downs. We're getting, these stocks continue to trade down. I know you're short a lot of financials, right? And
I'm short Citibank, I'm short Fannie Mae, I'm short investment banks, I'm short the home builders. Yes, yes, it happens to me. This was a good day for me.
It's been a lot of good days for you. So how much lower can, say, Citigroup go, you think? How much more pain is there in the system for the financial services companies?
Well, we know that we've had the worst credit bubble in American history, and they don't even know themselves. Fannie Mae has no clue how bad their balance sheet is, and Citibank doesn't either. I don't know how low they're going to go, but I'm not covering yet.
But how is it possible that the people in charge don't know what's on the balance sheet and they don't really know what they're holding?
Well, most of these guys didn't have a clue what was going on down there. There were a lot of people making a huge amount of money, taking big salaries, because they were putting together these structured deals. Do you think the head of Citibank had a clue what was going on? He still doesn't. That's why he's not there anymore.
Okay, so meanwhile, you got this huge rally in commodities, which you've predicted for years now, oil obviously included. Is there any end to what you're seeing there? Are we looking at any change in the demand-supply picture when it comes to oil first? Then we go into other commodities.
Nobody has discovered a gigantic oil field in over 40 years. No. Until until somebody discovers oil. OPEC had a big meeting this week. If they had a lot more oil to produce, they would be producing. They don't have it.
Why are
They know it and I
producing
know
though, Jim? I mean, let's face it, all these the OPEC members, they're making a huge amount of money on the price of oil. Why are they going to put more money? Were they going to put more oil on the market if in fact it's going to cut into their profits?
Because they're smart enough to know that ultimately, long term, and they've got to be in it for the long term, it's going to bring out alternate sources of energy. And if they don't do something, they'll send the economies in the tank, and they'll bring out a lot of windmills and a lot of solar power. They're at least that smart. The problem is they don't have the oil.
Well, the oil, a lot of people, you have the Exxon executives on, Chevron executives come on the show, they go, oh, look at the fundamentals of oil around the world. The oil is there.
You know what? I would like, next time they come,
Let's do a debate.
you say, where are they? Where is this oil, Mr. Exxon?
Yeah.
If there's so much oil out there, tell us where it is so we can invest in it too. The problem is they don't know where it is. If it's there, they don't know where it is, and I don't either.
What about other hot commodities? Where do you see opportunity today, even after the run-up that we've seen in so many of them?
Well, agriculture. I mean, I bought more agriculture myself today. No, that's where many agricultural prices are still very depressed on a historic basis. That's where, at least that's where I'm putting money, because that's where I see great opportunities.
Where's the demand coming from?
From Asia, from everywhere, from America. I mean, we're not starving here in America. We're not going to starve. But if you look at Asia, there are 3 billion people in Asia. They're getting more prosperous. They want to live better. They want to wear nice cotton shirts. They want to drink coffee. They want to have sugar. They want to have chocolate candy. They're trying to live like that.
You picked up and left the U.S. You moved your family to Singapore. Tell us about it. What are you seeing there in terms of growth, in terms of everyday life? How do you like it?
Oh, we love it. My little girl's in school with Chinese. No, Singapore's got the best education, the best health care. It's a wonderful place to live. We like it there a lot.
And in terms of the growth story in Asia, I mean, people say at some point we have to see some of that growth. In real estate, you're seeing prices come down. But I mean, how much slower can it really get? You're talking about an economy growing, what, 12% or so?
Well, yes, but the Chinese government is doing its best to cut back. They've raised interest rates 5 or 6 times this year. They've raised reserve requirements 8 or 9 times. They're trying to cool things off, and they've got to cool things off. I hope they do. I hope they pop the stock market potential bubble. No, they're going to slow things down. But Maria, if they only grow 3% instead of 12%, that's wonderful.
3% better than here. The final question, your single best investment right now, where's the biggest opportunity Jim Rogers is looking at?
To buy the renminbi or the Japanese yen or the Swiss franc.
All right, we'll leave it there. Jim, nice to see you, as always.
Or commodities, agriculture.
Still on commodities and agriculture, as you said. Jim Rogers, Beeland Interest Chairman. Avoiding those holiday travel headaches is next.